I'm going to show you exactly how one candle has completely changed the way I trade. For the longest time, I thought I was taking good trades. I had a good area of interest where I was looking to enter after a shift of market structure, and I was trading with high time frame direction. But I just kept on getting stopped out before price went in my favor. And I just had no idea why this was happening. Most traders think they're taking good trades with an overall direction at a good area of entry, but they just keep on getting stopped out like me, and it feels like something is missing. And you are missing something, the most important factor. And just by improving your understanding of one candle, you can completely fix this and become profitable. So the most important factor will always be timing. It's not what type of trade you take. It's not where you enter that trade. It's when you enter that trade that makes you money. As traders, we are trying to time the markets, which is really difficult. But I found one fix that makes timing easy, and it's called candle behavior. I'm going to tell you exactly how to use it, explain what it is, and how I use it for direction and entries. And this is completely backed by data. If we go onto my journal here, I have a 90% win rate just by using this one simple candle behavior entry model. So first, let's go over what actually is candle behavior. So candle behavior is just how a candle moves in reaction to that previous candle throughout the life cycle of that candle. So how does it move in the first half versus the second half if the previous candle is a bullish or a bearish or a strong bullish candle close. The whole point of candle behavior is that it makes it really easy to give timing to market structure. And let me explain. You should already know by now that higher time frame candles are made up of lower time frame market structure. Price is fractal. So this might be the hourly chart, where each of these candles is 1 hour. If we go on to the 1 minute, what that would look like, it would look like 1 minute market structure making higher highs and higher lows. And just by looking at this 1 minute market structure, you could find a nice area of interest. You could find the overall direction, but you wouldn't be able to find the timing of when to enter that trade. And this is where higher time frame candle behavior comes in to tell you exactly when to enter that trade or when to expect a pullback. As we're in a bullish uptrend, as the previous candle closed bullish as well. So in the first half of this hourly candle, I'm expecting it to first create a bottom wick to pull back on market structure. Then around 30 minutes into that candle, I expect it to then push up and flip and continue pushing bullish, continuing this overall higher time frame uptrend. So I expect around this 30 minute to continue pushing bullish. You first want to see it create a bottom wick in the first half of that candle in the first 30 minutes, and then reverse around that 30-minute mark and push bullish. If we were to open and then immediately push bullish straight away, this can be a sign of a reversal. As price is a wrestle between buyers and sellers, we will get overly exhausted. We're pushing in the first half of this bullish candle, and it's more likely to flip bearish and close bearish in the second half. More likely to potentially have a shift of market structure, what this will look like on the downtrend, where we're breaking a low for a reversal. So just by looking at how a candle moves throughout the life cycle of that candle in relation to the previous candle close, you can identify if it's going to be a continuation, a reversal, and when to enter and exit that trade. This can also be extremely helpful for direction. I do not trade with the daily direction. I do not trade with daily bias. I trade against that. Why is that? Because I'm trading Asia session. So if the previous day closes bullish and I'm trading Asia session, I'm trading in the first half or open of that new day. Because the previous day closes bullish, I would be expecting it to create a bottom wick in Asia to then push bullish later on during the day. So as we can see here, previous day closes bullish, Asia session is bearish, previous day closes bullish, Asia session is bearish. We're always creating that bottom wick in the first half of that day. This can also be really helpful for the weekly time frame as well if you're trading higher time frames. The previous week has a strong bullish close. We expect Monday, Tuesday, sometimes Wednesday to be bearish to create that weekly bottom wick to then push bullish. So just by understanding how one candle forms in relation to the previous candle, you can time the direction and you can also time your entry model. And that's example here for a reversal. We have this previous close bearish here, but in the first half of this candle, we push bullish straight away and then it reverses later on in that candle. So really being aware of how that candle is moving in the first half, whereas in this weekly candle here, we push bearish straight away to fill in this previous weekly candle close to then push bullish later on. So it's really important to understand high time frame candle behavior, as it makes it really, really easy to give timing to lower time frame market structure. So let's go into some live trade examples and we'll just recap this previous trade. Why was this actually a bad trade? How could we have avoided this loss? Well, ideally, you don't want to be trading against the previous hourly candle. Due to candle behavior, it's created this bottom wick in the first half of the open, and then we're flipping and pushing bullish, looking to continue this hourly candle. So we wouldn't want to be trading against that, especially in the first 0 to 15 minutes of this hour. Now we're approaching 30 minutes into the hour, where we can look for more of a reversal have a break of this little low here. So we could have taken an entry, stop above a previous high to target that same area of interest. As we've created this top wick, and now we're pushing bearish again to fill in that body. So that would have been a pretty nice, easy, simple trade, just using that candle behavior by seeing how it moved in the first open of that candle, how it reacted after taking out the previous candle high. So I'm going to show how we could have taken a better trade at this area of interest. We could have waited for a previous hour close in our favor, like in this scenario here. So the hour has just closed bearish, and we can look for it to create a top wick first to fill in this body, to create a little top wick, to then push bearish and flip that hourly candle. Because this is a smaller candle body, we are expecting this not to take as long because it's not that big of a move for price to fill. Lower time frame market structure wise, we also have a break to a high, a break to a low, a nice shift with this overall high time frame candle close in our favor. So this is looking like a really nice, easy trade. We're still trading in overall direction at a nice area of interest, but now we're trading with that candle behavior, with that previous candle close in our favor. So I'm just going to refine my area of interest to look for that entry. It's just going to be at these 1 minute candle lows where we're going to enter. Stop is just going to be above that swing high. And we're just going to take an overall continuation of this bearish condition. We can just target some, previous lows around here. And we're just going to target, let's say, a 1 to 2 at around this previous 1 minute structure lows here. So pretty nice risk to reward here. And so the new hourly candle opens. We create that top wick. We react to that lower time frame area of interest that we've refined. And then we're pushing bearish here. And it pushes nice and bearish in our favor. So this is exactly how you can avoid being stopped out and taking trade with overall high time frame direction, by making it so much easier to time when that move will happen using higher time frame candle behavior. So we'll just go over one more example of how candle behavior can be used for timing direction and entry models. As we can see here, the previous candle closed bullish. We're immediately pushing bearish, creating that hourly bottom wick. So we are now 29 minutes into that hourly candle. This is when you expect for this bearish candle to flip bullish in relation to this previous bullish hourly candle. We have this overall nice break to these 1 minute highs. We respected these previous lows here. So 1 minute structure has also shifted bullish. What we can simply do is just take an entry 30 minutes into the hour. Because we've pushed bearish in the first half, we're failing to break lows now on 1 minute structure, and we've broken a high. So 1 minute structure has shifted bullish. It's a good time to take a reversal, a buy, to create that top wick and push bullish on that hourly candle, because we've pushed bearish in the first half. We're using this hourly candle behavior to make it really easy to take a good trade that will be trading with volume at the right time. So it does eventually go in our favor. Maybe we could have had a bigger target, but it is what it is. Works out pretty nicely. And if you want a personal handbook so you can look at this and study this, and if you want a personal handbook with a full breakdown of how to use candle behavior, how to analyze candle anatomy, and my personal trading setups and explanation of candle behavior and how I use it, there's a link in the description below. We can get that all for free. So hopefully this was helpful. If you want me to cover anything else, just drop a comment and I'll cover that in the next video.